Welcome back to our channel, where we discuss personal finance topics related to stock market investing. Investing in the stock market can be daunting, especially for beginners. One of the key skills for successful investing is understanding fundamental analysis, which involves delving into financial statements and ratios to assess the health and potential of a business. This video offers a comprehensive guide for beginners on how to navigate and interpret financial statements and ratios. Understanding fundamental analysis. Fundamental analysis is the process of evaluating a company's financial health and prospects by examining its financial statements. It helps investors determine the intrinsic value of a stock and make informed decisions. The role of financial statements. The backbone of fundamental analysis lies in three primary financial statements: the income statement, the balance sheet, and the cash flow statement. Income statement. The income statement, also known as the profit and loss statement, shows the company's revenues, expenses, and profits or losses over a specific period. It helps investors understand how profitable a company is. Balance sheet. The balance sheet provides a snapshot of the company's assets, liabilities, and shareholders' equity at a specific point in time. It shows what the company owns and owes, as well as the amount invested by shareholders. Cash flow statement. This statement shows the inflows and outflows of cash and cash equivalents. It helps investors assess the company's liquidity and its ability to generate cash to fund operations and growth. Key financial ratios. Financial ratios are tools that help simplify financial statement analysis and compare different aspects of a company's performance. Price to earnings, PE ratio. The PE ratio compares a company's share price to its earnings per share. A higher PE might indicate that a stock is overvalued, or investors expect high growth rates in the future. Debt to equity ratio. This ratio compares the total liabilities of a company to its shareholders' equity. It shows how much a company is financing its operations through debt versus its own funds. Return on equity, ROE. ROE measures the profitability of a company by dividing net income by shareholder equity. A high ROE indicates a company is using its funds effectively to generate profits. Current ratio. The current ratio measures the company's ability to pay its short-term liabilities with its short-term assets. A ratio above 1 indicates that the company has enough assets to cover its current liabilities. Analyzing profitability. Profitability ratios like gross profit margin, operating margin, and net profit margin are crucial. These ratios indicate how well a company is managing its costs and how much profit it's generating from its operations. Understanding liquidity. Liquidity ratios, such as the current ratio and quick ratio, assess a company's ability to pay off its short-term obligations. This is crucial for understanding the financial stability of a business. Evaluating efficiency. Efficiency ratios like inventory turnover and accounts receivable turnover show how well a company is managing its assets. High turnover ratios typically indicate good management and operational efficiency. Solvency analysis. Solvency ratios, such as the debt-to-equity ratio and interest coverage ratio, help in evaluating a company's long-term solvency and its ability to sustain operations in the long run. Comparative analysis. Performing a comparative analysis by comparing financial ratios and statements across different periods or against industry benchmarks can provide valuable insights into a company's performance and competitive position. The limitations of financial ratios. While financial ratios are powerful tools, they have their limitations. They should be used in conjunction with other analysis methods and considered in the context of the industry and overall market conditions. In conclusion, fundamental analysis is an invaluable skill for any investor. By understanding and effectively analyzing financial statements and ratios, beginners can make more informed investment decisions. It's important to remember that these analyses are just one part of a broader investment strategy. If you enjoyed this video, please like it and subscribe to our channel.